It's casual dining week for me. We're going to be doing a casual dining deck on Thursday, going over the industry. But before that, I'm gonna add Red Robin RRGB to the top of the best idea list short list this morning. In the note, we are going to have a Hedgeye Restaurants one pager elevator pitch we've reworked for the Hedgeye Restaurant team. Uh, a couple things. First, Red Robin reported on August 10th last year. It's August 14th today, so it's a little later than they've reported in the past. It's not the latest that they've reported. They did report August 23rd in 2019, but I'm just questioning whether they've got the number together and why it's a little later than it was last year. The stock's up 128% year to date on the CEO transition plan, which is adding labor costs to the P&L and also complicating the back of the house. And what I mean is they are rolling out untested, frankly, flat top grills to the restaurants versus a conveyor belt, right? So if you think about the simplicity of the conveyor belt, right, you turn it on, set it to 400 degrees or whatever it is, set the timer for 2 minutes, and you get a perfect burger every time. Really simple, really easy. As opposed to a flat top grill, which they're going to, which you actually have to have a semblance of some skills. If anybody's ever tried to cook on a flat top grill, and I do have one, it is not easy to do. So I think they're adding labor costs and they're complicating the back of the house and not simplifying it. And you can see this so it's not working. And you can see this in the traffic data. I've got a chart here this morning. You can see the Red Robin traffic data has gotten worse every month of the year, sequentially down every month of this year. So whatever he's doing, it's not adding to the traffic in the stores. So I'm not alone on this because the short interest is up 900 basis points to 18%. So a lot of other people kind of agree with me that the stock is a short, which means if I'm wrong, there potentially could be short squeeze, but I don't think I'm going to be wrong, but I've been wrong in the past. And we also have Brinker reporting on Wednesday. We're going to have a preview note up with them. Chili's is also going through a turnaround. And as you can see in the Chili's traffic, which I have a chart too, this turnaround plan is actually working, where you can see sequentially better traffic since they turned on advertising in early April, call it late March, early April. And it continues to show better traffic trends each month. So if there's any kind of concern that will emanate from the earnings call, it will be guidance. This is their fourth quarter. So they're reporting their fourth quarter, so they haven't given guidance for fiscal 24. And the street has, and I do believe it's warranted, 3% revenue growth and 19% earnings growth, which suggests some leverage in the business model on that 3% revenue growth. But the turnaround plan is working and they're getting better traffic. So that is a long bias for us right now. We're a little concerned about the cycle and where we are in the cycle, and that's why it's not a best idea long, but it easily could be. If they come through with a decent quarter and the guidance looks good and the traffic trends remain the same, easily Brinker could become the best idea long. I did go to the analyst meeting a couple of weeks ago, and I do really like the plan that they're doing to turn things around. But casual dining week for me, we got a deck on Thursday to go through the rest of the group.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.